So you want to master breakout trading? Here's how to confirm a breakout in 3 steps. Step 1. Identify key support and resistance levels. Step 2. Look for a strong price movement through these levels. Final step. Confirm with increased volume for reliability. Boom! You're ready to trade with confidence. Remember, always manage your risk wisely. Y'all ready to trade? Let's make it happen! Ever notice how a breakout with high volume feels like a big deal? That's because it is. More volume means more participation and a higher chance of follow-through. Here's the trick. Compare the breakout candle's volume with the recent average, like a 20-day average. If it's higher, you're looking at a strong signal. So next time, don't just watch the price, watch the volume too. After breaking a key support or resistance level, the price often comes back to retest it. This retest is crucial. A successful retest with rejection, like a pin bar or engulfing candle, strengthens confirmation. It's like the market asking, "Are we sure about this move?" When the retest holds, it signals a stronger conviction in the new trend direction. Traders watch for these signs to make informed decisions. Remember, a retest isn't just a test, it's a confirmation. So, next time you see a retest, pay attention. Wait for the candle to close beyond the breakout level. Avoid entering during intrabar breakouts. Price may retrace before the close, so be patient. Stick to the same or higher time frame for confirmation. Rushing in can lead to premature losses. Remember, patience is key in trading. Momentum indicators are key to understanding market trends. Use RSI, MACD, or ADX to gauge momentum. RSI above 50, that's a bullish breakout signal. RSI below 50, watch out for a bearish breakout. A MACD bullish crossover confirms an upward breakout. And if ADX rises above 2025, it confirms trend strength. These tools help you navigate the market with confidence. Stay informed, stay ahead. Analyzing the market can be tricky, right? Here's how I use multi-time frame analysis to stay ahead. Step 1. Spot a breakout on a lower time frame, like the 1H chart. Step 2. Confirm it on a higher time frame, like the 4H or daily chart. This helps me avoid false breakouts caused by noise. Final step. Make informed trading decisions with confidence. See the difference? It's all about the right strategy. Use this approach to enhance your trading game, or keep guessing. Your choice. Chart patterns can be your best friend in trading. When a breakout occurs from a pattern like a triangle, flag, or head and shoulders, here's what to do. First, ensure the pattern has a clear structure. Next, identify the measured move targets for potential gains. Finally, confirm with supporting volume and price action. These steps can help you make informed trading decisions. Remember, patterns are not just lines, they're opportunities. So, are you ready to spot the next breakout? I'm about to share 3 trading tips that can change your game. Tip number 1. Watch for breakouts during high volatility sessions like the London or New York Open. These breakouts tend to be more reliable and can lead to big gains. Tip number 2. Set your stop loss wisely to protect your capital. Don't let emotions drive your decisions. Tip number 3. Keep an eye on the news. Market-moving events can create opportunities. Which tip will you try first? Or did I just make you rethink your strategy? Be honest.